Hello and welcome to The Big Fight. I'm Nidhi Razdan. India's growth has slowed down. The latest GDP numbers are out, and in this quarter it has come down to 5%, much lower than what was expected. In fact, it's the lowest growth in 6 years. Just a couple of hours before this data was released, the finance minister held a press conference announcing the merger of public sector banks, cutting the number of government banks in India from 27 to 12, arguing that this was needed to strengthen credit. The government hopes that this will improve lending to businesses and ordinary folks right down to the branch levels. But will all this be enough? If you look at the broad trends in the economy, at the moment they are worrying. Just heard the GDP numbers. Unemployment is at a 45-year high actually. Car sales have slumped to their lowest in 20 years in July, and infrastructure output grew at its slowest pace in more than 4 years. Over the last week, the government has tried to make a number of announcements that included budget rollbacks and easing foreign investment rules just the other day to asking banks to make loans cheaper to spur growth. Now, they've also got the RBI to give the government a record windfall of 1.76 lakh crores, which many hope will spur investment. But will it? Many experts, however, say that much of what has been announced over the government isn't anything big bang. It only amounts to tweaking some policies, and what India needs right now are some radical decisions. The RBI's just released annual report says that you need major structural reforms in labour laws, in taxation and other legal reforms as well, and that the macroeconomic environment remains unsettled. And so we're asking, is the economy in a deeper crisis than we think? We'll go straight across to our panelists tonight, and as always, we begin with our opening round, 1 minute each of opening statements to all our panelists, and we begin with Mihir Sharma, Senior Fellow at the Observer Research Foundation. Mihir, is the crisis deeper than we think? Your time starts now.
I think that, well, I would have said yesterday, yes, but today, now that we have these numbers out for GDP, I think it's quite clear that we are in a crisis, and very few people will be able to disagree with it. It's gone down from 8% growth to 5%, and I want to stress that this is the second time it's happened. In fact, it happened in the year of demonetization also. A slowdown happened prior to demonetization, and demonetization delivered a shock to the system. There was some recovery, temporary, after demonetization, probably because of the money coming back into the economy. And now the structural problems in the Indian economy have reasserted themselves. The RBI has said in its annual report that this is more a cyclical thing, it will sort itself out, than a structural thing, but I think they're wrong. There are deep questions as to where the next burst of growth will come from, questions as to why anyone would invest in the Indian economy when there's still uncertainty about the future, uncertainty about demand, uncertainty about the kind of capacity that is needed.
Okay.
And most importantly,
your time is up. All right, most importantly, your time is up, but I'll come back to you when we open the arguments. Rajat Sethi is here with us. He's a political analyst, advisor to the Manipur Chief Minister as well. Rajat, your time starts now. Not a good day for the economy, clearly, but do you think the crisis is actually deeper than what we had assumed?
Well, definitely the numbers that have come in today are a bit depressing in general. But if you were to look at the bigger picture, where is India placed in the global setting? You know how the trade war has unfolded in the past month or so, and where is it headed in the days to come. We believe internally that the fundamentals of the economy, and there are 4 or 5 benchmarks around which you can measure the deficit numbers. Are the government of the day being responsible enough or not? Then yes, clearly they are responsible enough. You look at the external factors wherein the currency is pretty much stable, inflation numbers are low. Definitely the GDP number is one such area which hasn't, it's not like a recession story which is being projected out, but definitely the numbers are lower than what the government of the day would have wanted to see. Now in this setup, we believe, personally speaking, if through my experience, that we are going to look for the transmission to happen of the policy statements that have been made by the finance minister to at least take a couple of quarters to show results. So we will see that the growth will require at least
a couple of quarters to show results.
Back to track.
Your time is up. I'm going to Milind Deora, who's joining us from Mumbai this evening. Milind, your 1 minute starts now. Deeper than what even you expected, Milind? A deeper crisis?
I don't think the June to August quarter falling to 5% growth is a surprise. It is obviously 5% is a very scary number because it's the lowest it's been in 6.5 years. But I've been saying for a long time, based on my conversations with traders, businessmen, industrialists, that there is a serious crisis, you know, and that's going to manifest itself in some way or the other, and that's happened with the new growth rate figures. But I do believe the government is doing its best in a sense to respond to it. I do believe it's too late. Time will tell if it's too little or not. And there are many things that the government still needs to do, I think, to boost investor confidence, business confidence, get the growth engine back on track, and that's something I'm happy to discuss with you during the course of this discussion.
All right, interesting. You say that the government is trying its best to respond. I mean, do I sense a political follow-up there? I'll ask you that later. But Nasir Salim is with us. He's a banker, the managing partner of Flexi Capital. Nasir, what do you think?
Nidhi, I think clearly the numbers are not looking favorable at all. I think 5% was not even expected. We were about 5.5 to 5.7. And given this number, obviously, it does given a lot of negativity around. And the sentiments obviously look further pulled down. But having said that, I think, you know, we need to also understand that currently where we are as we stand, there are a lot of global pressures also building up. I mean, in the US, we've had a negative inverse relationship on the yield curve, and that is also playing up its impact on domestic issues. So clearly, I think between all of this negativity, I think the one great thing is that the government is being responsive with their every Friday weekly announcements coming up, and that is going to help in spur certain amount of or address some negativity that is currently on. Secondly, I think some green shoots between all of this, Nidhi. We're expecting a good normal monsoon. I think there's going to be a lot of agri push there on account of the Rabi season coming up. Oil has been a great support. I think again at $60 a barrel today, as we see, can be a great positive.
Okay, your time is up, Nasir. Coming back to you in just a moment. Sanchita Mukherjee is the co-founder of Blue Edge. She's a private wealth manager. Sanchita, did you expect 5%?
Well, Nidhi, in my opinion, what I hear over here is that it's India GDP growth versus the world GDP growth, and India GDP growth versus the India GDP growth. That's 8% versus 5%. Yes, from that perspective, it's surely a slowdown. I would not deny that, and nobody will deny that at this point in time. But having said that, I think the pessimism has been very, very overstretched and overplayed, because if you were to see the global realities, what he just mentioned, we have close to $17 trillion bonds into negative yielding situation globally right now. All the central bankers met up at Jackson Hole in Wyoming, and they couldn't figure out what to do with their respective economies. The fact that Eurozone is going into recession, US, there's a huge recession fear. The US-China trade war is having its impact on global economy as such. Within that situation, would you think that the Indian GDP growth at 5% is still one of the fastest growing economies in the world? Yes, we have had issues. We have had slew of reforms which have happened too fast. Demonetization, GST, RERA, IBC, all of this has taken its toll.
Your time is up. Coming back to all of you in just a moment. Our final guest this evening is Daniel Lacalle, who is an economist joining us via Skype from London. Daniel, do you believe, like some of our panelists feel here, that it is unfair to single out the Indian economy at this time? There are global factors at play as well. Or do you think India, in a sense, has brought this upon itself with the way it has dealt with the economy in the recent years?
I don't hear now.
All right, I'm going to try and come back to that when we actually fix that, the joys of television. So let's open this debate up. Mihir, is the pessimism overplayed, as Sanchita is saying? Is the pessimism overplayed? Are you not looking enough at the global factors out there and what else is going on?
Sure, let's look at our peer countries. Why are we comparing ourselves to mature economies like Europe or the United States? How's Vietnam doing? How's Bangladesh doing? I'll tell you how they're doing. They're growing their exports, and their economic growth is comparable, if not higher, in the case of Bangladesh. Why is it somehow that when we look all our peer economies, comparable exporters seem to be doing perfectly well in this climate, but the Indian economy is struggling? And this is absolutely inaccurate, this claim that it's something to do with the global environment. Even in this global environment, we should be growing at several percentage points faster.
How much more?
I can't guess, because I don't know what the current GDP growth rate is anyway.
Are you suggesting that this is not the actual GDP? That
no, I'm saying that we don't. There are questions continuing to be asked about the accuracy of this particular series. So people look at other things.
Rajat?
I'll not get into the debate of GDP. That will require another hour-long session. But one thing that we need to look at is how much of the problem do you attribute to the global factors versus the domestic? I would say 50-50. There are certain sectors, and I look at that sectorially because otherwise it's all a hyperbolic discussion, that it's a gloom doom story on one side and a perfectly rosy story on the other side. The reality is somewhere in the middle. We have all discussed about the global factors. Regarding domestic factors, there are certain industries who are actually going through structural transformation. One such industry which we have debated ad nauseum was auto sector. You know, the BS6 was imposed by the Supreme Court, not by the government. They were given a strict timeline in which they had to move from one regime to the next regime. And of course, that would have had impact on both the labor markets as well as people just staying back from buying BS4. And good that the government clarified. Then you have sectors, other sectors like IT sector. The most recent report said that the IT sector is actually seeing a 38% increase in jobs. Mind you, it's an increase in jobs in the similar gloom story.
That's actually true.
So, so if you look at sectorially and pick out certain sectors who are actually seeing big transformation happening, big layoffs happening, but on the other side, you will see such sectors. And one big example is the FDI number. India in the first half of 2019 has seen $65 billion of FDI coming in. It's a record number. Never historically has this number been achieved. And the reason being, you have some of the fastest unicorns that are being built in this gloom and doom scenario, supposedly, this gloom and doom. You see Ola Electric Mobility. It's an electric mobility-based company which has become a unicorn within valuation-wise in just 3-4 months. You see which sectors are booming, and this is where our labor market has to transform itself, has actually have to look at sectors which are growing, are providing jobs, and move away gradually from the sectors which are not offering jobs. And this is where the big debate should happen.
But I want to ask this, Nasir, is part of the problem here that the government has often tried to paper over the crisis issues and the problems with the economy into trying and managing the headlines? For instance, you have the announcement on the PSU mergers today. Just before the GDP data was out, I guess the government knew it was going to it would be pretty bad. But is there too much time being spent in trying to somehow manage the headlines and paper over what is going on?
See, Nidhi, clearly I think as far as, so I agree with you, there has been a lot of course correction, if I can say so. And frankly, what happened in the budget was debudgeted, just a few weeks later. But clearly, between all of this, the government needs to also understand that they've given out very confusing signals, and I must say it very openly. Our friend just said about the automobile industry and the automobile sector. Here's my point, Nidhi. Why at the first place you talk about giving provisions and subsidies for electrical vehicles when you don't have infrastructure in place to support that? Obviously, there are enough fence sitters today who wish to buy a car. At the end of their 6-7 year that they've held on to a car, they may want to buy a car, but they're actually being stopped because they feel, why should I go and pick up a locomotive diesel engine or a petrol car as against an EV which could actually possibly come up in the next 2 years? So very confusing signals there clearly being given. Having said that, I think retrospectively also changes that they've been trying to now address have also not gone down very well as far as the numbers are concerned. And today, as we see, the trend as far as the GDP numbers are concerned, Nidhi, has been decline. It's not just one fine day we woke up to 5%. There has been a shock. The shock has been now absorbed. It's finally available on the GDP numbers. And I'm not saying it's fudged. I'm sure the GDP number is accurate to 5% because it's a preceding trend line. Over the last few quarters, you see you have been coming down, every quarter and quarter you've been declining on GDP.
I don't think Mihir quite said fudged. He doesn't
Not
quite know
fudged.
whether
I don't
it's
mean
accurate.
fudged, yeah.
No, I personally feel that the numbers today are, and actually it's a good thing, Nidhi, that we're accepting it, that it's actually at 5% because there comes the opportunity to address some of the concerns that are emanating on the economic front.
Well, let me go across to Daniel Lakal. We have him back on Skype from London. Daniel, what do you think of this economic slowdown that we are clearly seeing in India? Do you think it is to do with the global economy and that global factors are outweighing India's own domestic factors, or do you think India has just not paid enough attention to what's been going on domestically for the last couple of years and ended up bringing the growth rate down to 5%?
I think it's a combination of both. Obviously, the Indian economy is very geared towards the economic cycle that we're seeing globally, and we're seeing a global slowdown. That is true. But you're absolutely right, and I was listening to what some of the commentators were saying before, is that the government has not paid attention to the slowdown of the economic cycle with internal demand. The internal demand has been a big factor in the disappointment today. Everybody was assuming a 5.8% growth considering the shape of the global economy. What has been the most negative surprise has been the weakening of internal demand, and that comes fundamentally from 2 years of ignoring the signals. Demonetization, subsidizing very aggressively but unwisely, as one of the commentators was saying just a couple of minutes ago. There's been a tremendous demand side driven policy that was ineffectively applied and paying too much attention to trying to boost GDP through government measures instead of allowing the private sector to breathe and thrive. I think a combination of demonetization, rising taxes to some areas, and the combination as well of very unwisely, or I would say misguided subsidy programs have been significant factors in the internal demand weakness.
Well, interesting points you make there, Milind. If you wanted to jump in on that, on this issue of, as you said, the government trying to respond, but you're asking whether it's too late. Do you think it's actually too late?
Well, I don't think it is too late.
Sorry,
government...
that was for Milind Deora here in Mumbai.
Firstly, I think this debate of...
Sorry about that.
No, go ahead, Milind.
Firstly, the discussion and the debate about whether it's due to global economic factors or local ones, I think that we should lay that debate to rest. In fact, I believe India has benefited more from global tailwinds than the global headwinds. The gentleman before me was speaking about how the IT and IT-enabled sector are hiring people. Mind you, the IT and IT-enabled sector is entirely export-driven. The sector is growing because of growth in the United States, because it's starting to expand and export increasingly to countries like Japan. The fact that the last 5 years this government has benefited from low oil prices, that's a global tailwind. So I do believe that a lot of our problems are domestic. I do believe that they're India created, and I don't think we should be blaming the world and what's happening internationally for our problems. Now, having said that, in my opinion, there are many reasons for this problem. I think one is there has been lethargy on the part of the government over the last 5 years to essentially take advantage of these global tailwinds, low oil prices being one example, failure in the last 5 years to disinvest from loss-making PSUs. It's taken 5 years for the first government with a majority after 30 years to move towards greater public sector bank consolidation. Mind you, this is a proposal which was first suggested by the Narasimhan Committee appointed by the then Finance Minister in 1991, Dr. Manmohan Singh. UPA years also, different finance ministers, Pranab Mukherjee, P. Chidambaram, spoke about consolidating public sector banks, moving towards a scenario where we have 2 to 5 public sector banks so that we can increase our global competitiveness. Of course, we had political compulsions. We didn't have the mandate that BJP had, and we failed to do it. The fact that it's taken them 5 years to even announce that decision.
Okay.
Now today the decision has been announced by the finance minister.
Because I want to ask Sanchita
the
then.
public sector banks will have to discuss it internally within their boards.
Sure.
Then they'll have to move to approving that. So my limited point, Nidhi, is that I think that the problem is India driven. I do believe demonetization has had a severe impact. I do think that this government failed to disinvest PSUs, take advantage of certain tailwinds, and I do believe one thing which goes beyond government A or party B and is a legacy problem in our country and a systemic problem is the fact that the levels of agency overreach, whether it's the income tax, whether it's the enforcement directorate, whether it's the CBI, it's gone completely berserk in India, and that's something I've been warning against for the last 5 years. It was also happening during the fag end of UPA too, I do admit.
And when industry
but right now it's reached an all-time high, and that, mind you, has dampened business sentiment.
Yeah, absolutely. No, very valid point there. You know what Milind raised about the public sector banks, Sanchita? This announcement today by the finance minister, what impact do you think it will actually have? Do you think this is something that will again change the sentiment?
Yes, firstly, I do not agree with any of the points Milind just spoke about, because if you're talking about domestic economy and the domestic consumption as we all know it, it comes from primarily the credit in the system, the public sector bank and the NBFCs. Now let's look at it. This government inherited a bad legacy of public sector bank NPA loans. It was dirty to the core. They spent 5 years cleaning up this mess. The slew of reforms that we are talking about over here, which is the IBC, that's Insolvency and Bankruptcy Court, setting up the NCLT, that's short-term cleaning. Cleaning up this whole entire NBFC situation, because the public sector banks, because they were ridden with bad loans, they were not being able to lend to the NBFC. So obviously NBFC stopped lending and the consumption fell off the cliff. That is what had happened. So if you're looking at the government's performance, government will not think quarter on quarter like the stock market. Government has to think long term. Government has to think 3 to 5 years. So they set up a platform in which these reforms like the GST, IBC, RERA, the slew of reforms that you're now talking about, that the tax terrorism, for example, that you just mentioned, faceless tax assessment, things like that. I think they're taking the right steps, but short-term cleansing can be very painful. However, I think the steps being taken to address consumption and the economy are correct from a long-term perspective.
You think they're thinking long-term?
Yes,
Did they
absolutely.
think long-term when they did demonetization?
I should think so, yes.
You do, Mihir?
I would partly agree with that.
One second, Mihir, I want to ask you. You think they really thought this through? Are we still in denial about the impact of demonetization on the economy?
Well, I think that it's unfair to blame everything on demonetization. The government was inept in its first term. It came in thinking that the economy would run perfectly well just on the basis of new management. And they had an enormous tailwind that from oil prices that provided a massive, effectively a massive fiscal stimulus over multiple years and an enormous cost advantage. And so therefore it looked like the economy was doing well. They postponed any major market reforms. They postponed major FDI reforms. They postponed major financial reforms for a very long time because they thought that things were going well. And that cannot be blamed on anyone else and cannot be blamed on anything else. It's nothing to do with demonetization. Demonetization was a bad policy. We'll set that aside. But they did. The exact problem is that they did not think long term, because I think they failed to understand that growth is not India's birthright. Growth has to be earned. And they failed to do the spade work for earning it.
So what do you think about the merger of the PSU banks today? Will it help?
The point is not whether you merge banks. The point is whether it makes them more independent, more efficient, and eventually more isolated from political control and political aims. I am yet to see whether that is part of this.
Rajat, would that be the big bang reform to actually let go of government control of public sector banks?
Of course, I think
that would be very radical.
If Mihirji would have heard an hour-long press conference of finance minister, he would have realized there were certain very important announcements which she made to free up the banks from any kind of clutches of the government. So these are small step-by-step processes which will eventually reach the end goal of freeing up from the political influence, from the bureaucratic control, etc. So she has said, even in the previous press conference, she has said that she'll set up these advisory bodies within the bank. Now she is saying that we are going to increase the tenure of 2 years so that people have freedom to execute the policies that they want to. She has really initiated the process of banking reforms. It's the need of the hour. Eventually, this is going to have a lot of accretive benefits because of these mergers. Clearly, it will be highly capitalized as well. She has just gone through the numbers. The NPA numbers are overall also looking better now. So I think these are important steps in the right direction. Of course, the transmission of these effects will take a couple of quarters to come in.
As you said, Daniel, the question then is that do you think, the announcement on the bank's FDI this week as well, India easing up its rules on FDI, do you think that would be enough to change business sentiment? Right now, sentiment is so down. There's no private investment happening even domestically. I mean, Kiran Majumdar-Shaw, other captains of industry have come out publicly to say how worried they are about that. So do you think that these steps are going to help? in a couple of quarters at least, as Rajat is saying?
It's very, very difficult. It is extremely difficult. And the main reason why it is extremely difficult is because it is not an issue of government support. And it's not an issue of just the government deciding that credit growth has to improve. It's a regulatory tax, and also it comes from the risk perceived by economic agents. So although it might be a step in the right direction, a historical problem is to believe that government-led banks are going to support the economy better than private-led banks. That's not going to happen. That doesn't happen. The issue of malinvestment that one of the female commentators was mentioning before does not disappear because of government intervention. It increases because of government intervention. The governments don't have better or more information about what the real economy requires and what economic agents need than professionals. And politically driven stimuli generate, obviously, a short-term impetus. We've seen it in the past. But what this government needs to do to strengthen the Indian economy, which is fantastic, which has tremendous potential, no question about it, what it has to do is to abandon demand-side policies. What it is doing is creating the policies that will generate further stagnation in the future. The last two budgets in particular have been extremely damaging for long-term growth.
If I could just interrupt and ask you, what are the policies that they are talking about that you think will only increase stagnation in the future?
This constant idea that the government decides which economic agents win and which economic agents lose, the constant subsidization of low productivity sectors against higher taxation and worsening conditions for high productivity sectors. That is in essence what generates stagnation in an economy. That is what is driving the current slowdown in the Chinese economy and all of the challenges that the Chinese economy faces right now. Very, very aggressive. India cannot. One of the esteemed colleagues that was talking right now was talking about how India tremendously benefits from global growth. Absolutely it does. So we need to focus not on the challenges of the external part of the economy, but the internal ones. And those, when the government, budget after budget, is consistently driving demand towards the overcapacity sectors, and it's at the same time exchanging the sectors that can grow, the small and medium enterprises, the technology sector, etc.,
sure,
for GDP-boosting sectors, which tend to be the overcapacity ones, it is a very negative, it can be a very damaging long-term effect. So when somebody was saying, one of the esteemed colleagues was mentioning that the government is thinking long-term, unfortunately, it is thinking long-term Keynes, and is thinking in China terms. And India is not China and should not be China. Let's start from that perspective. India is not China and should not be.
Well, Sanchita, you made that point. What do you think about what Daniel is saying there? That India is looking at itself as China and it's not China.
Yeah, India is not China at all. Our economic model of growth is completely different. China has an export-oriented growth model for their economy, and India is consumption-driven primarily. So it is unfair to even compare India with the Chinese model, because let's compare apples to apples. It's not the same at all. But having said that, what Daniel was saying is, I would give a different perspective. I think the government is focusing on the small and medium sector. They have done so with the reforms that they have come out. What we are seeing of the 5% GDP growth is a very lagged effect because of the effect of the GST, and the fact that the input credit cost did not come. I mean, these were teething problems, right? This is bound to happen. When you have reforms.
You expected 5% today?
5% is a very negative number. However, I would think this number should improve going forward after 2 quarters. because I don't think it is, I agree with the RBI, I don't think it's a very, very structural issue. I think it's a very, very cyclical issue right now, what is happening.
Well,
There
clearly
is-
a difference of opinion, because Mihir says the opposite. But Nasir, you were shaking your head when Sanchita was talking about, small and medium businesses, and also the interesting point that Daniel made, that it's not necessary that the only way to sort of put a band-aid on things is to have the government have a greater role in it.
No, Nidhi, I think firstly, as far as the MSME and the SME space is concerned, clearly I think the government needs to be blamed, because, for example, GST, it was a flawed execution. Cost of compliances have shot up. As a matter of fact, they've actually gone and killed the SME business sectors. And that's where we need to kind of address issues immediately. The point that everybody is making right now is that what I understand is, Nidhi, is structural are long term, short term is where the government is completely gone amiss. They've not done enough to address short term issues. For example, repeatedly I've been saying this in your shows and a few other channels. What are you doing enough? Are you doing enough to create liquidity transmission? Liquidity is not a challenge in itself. Transmission remains a big challenge. Today, a few steps that they've taken in terms of consolidation of larger PSU banks possibly is the right step and the direction, but I still feel we're far away from that. Number two, I think as far as your point about only blaming the government, clearly, Nidhi, the way I see it,
No, I think what Daniel was saying, it's not just the government that needs to necessarily step in.
No. So I feel, we've back in the MBA days, we learned something called the cannibalization model, which basically talks about how you can innovate different products and gain higher market share. I think today, for example, in the automobile industry, if you see Hyundai as an example, if I can take, they've been launching models every quarter, Nidhi, and the impact of their bottom line has actually not shown any decline. As a matter of fact, Maruti Suzuki, for example, has been a little, they've had a lackluster performance in terms of quarterly results, but on the contrary, Hyundai Motors is actually doing well. They've actually had a good consumption story going there, Nidhi. So my point is, government should also push for innovation. If they do that successfully, and if they give impetus to MSME and SME and innovation is the way forward, I think it will address most of the issues between the MSME and the SME space.
Milind, if you had to suggest a couple of things that the government needed to do to at least change the sentiment, like you were talking about the issue of tax terrorism, the use of agencies, and just the overall sort of dampened spirit at this point, what do you think they need to do immediately to change that?
I think they need to re-engineer the rhetoric in our country, and I think that's all political parties need to do that, wherein branding a businessman, a small, medium businessman, large industrialist who has taken a loan from a bank, has experienced business failure, to paint them all with one brush, label them as chores, label them as willful defaulters. I think this is significantly hurting the India story. From my interactions with people, I really divide it as a debt versus equity problem. If I talk to entrepreneurs, and largely if you look at people in the tech space and the internet space, they're all receiving equity funding. They're very buoyant and excited about how things are progressing. There's 4G networks, people have access to wireless broadband, people are consuming more and more goods and services online. So that space is booming and that space is doing well, and in a sense is completely disconnected and isolated from what's happening with entrepreneurs and promoters who are borrowing money. And I think there are severe problems of agency overreach, and that is something which needs to be controlled. The spokesperson who mentioned that the government has, in the budget speech, the finance minister announced e-assessments, essentially to keep the assessee away from the tax department. And they set up a pilot project. I think it's great if that works, but we all know that the real problem is the discretion given to a tax officer, the discretion given to somebody working in other agencies. And unfortunately, in today's day and age, if one of the agencies wants to brand a particular businessman, small, medium trader even, as a chore, as a crook, it's very easy for them to do that. Unfortunately, Nidhi, your own profession, the media also joins in, and the narrative gets built, and that individual or that promoter or that entrepreneur's reputation is destroyed for life.
Okay.
And it's very, very hard for them to come back and restore their reputation.
I want to take that
and
to
that
Rajat.
I think is something which is deterring promoters and entrepreneurs from doing business.
Okay, but that's an
Milinji,
important point, Rajat. Yeah.
Milinji, principally it is your political party who came out with this, completely aggressive stand against people who, even Nitin Gadkari ji said, after all, he's a businessman. There can be, failures in business as well. But you deliberately, the Congress party, created no space whatsoever and started, using the surname of Nirav Modi and trying to have a false linkage with the Prime Minister Narendra Modi. If such shallow level of understanding comes in from the principal opposition party like the Congress, that's a very sad state of affair. You at least have to be principally based on certain basic fundamentals that we are not going to demonize the businessman at the end of the day. If he is running, let the courts, let the law, let me complete, let the legal agencies of the day follow them up, and I'm sure that the government can be held accountable if nothing is happening.
You don't think there is agency overreach right
now?
No,
how? No, see, they have created a political environment where the Congress party,
but they're not in power now.
But see, an opposition has a very important role overall. They tried
but
to,
the agencies are with the BJP. Now it's been, more than 5 years.
Now it will go till the end. I am pretty sure that every single person, every single businessman now who has, so please let me complete, who has, done any wrongdoing economically will be chased. Now there cannot be a way out. There cannot be like this way and that way. Both are my ways, and I'm going to know.
Milind wants to respond to what you're just saying. Milind, go ahead.
Yeah, may I ask who the gentleman is and what his designation is?
Rajat Sethi. He's a political analyst. He's an advisor to the BJP Chief Minister of Manipur as well. I hope that makes it clear.
Yeah, that should make it clear. Milindji, boliye.
Okay, well,
please give me your arguments. Person doesn't matter. It's the argument which should have been addressed anyway. Please go ahead.
Yeah. No, I wanted to know where you're coming from. Hear me out. Please hear me out. I don't want to make it a BJP versus Congress issue. I think that since from what I understand from Nidhi, you represent the BJP. Look, when I was a minister in the government and I was a minister of state in the Ministry of Communications and IT, and we were doing our level best to grow the sector, and we in fact were following the policies of the late Vajpayee ji, and Arun Shuri, who as telecom minister decided to bundle telecom licenses with spectrum. It was the then opposition, in fact, which created a shrill rhetoric, which dubbed the 2G issue as a mammoth scam of 1,76,000 crores, which was later thrown away by the special court, mind you.
Not at all.
So let's please not get into who started this.
It was not the opposition which started. It was a CAG report.
Regardless of party A or party
Unlike
B,
the Congress party,
mind you,
these
Nidhi,
institutions are not
by
a
the way,
political
mind
hijack.
you, it's the telecom sector and the fact that such a major reform of whether or not to auction spectrum was one of the biggest reforms, and a decision taken not by Parliament, not by Cabinet, not by the Department of Telecommunications, not by the Telecom Commission of India, but by the courts, because of the shrill rhetoric created by political parties. So I do agree that political parties have a huge role in creating the right narrative, in creating a conducive environment. And I'm going beyond Congress versus BJP. I'm saying that the government has to make that first attempt. The government of the day has to help to de-shrill the atmosphere, to create a conducive environment that actually encourages and allows businessmen to flourish.
Okay.
And the first way to do that is to ensure that there is no agency overreach.
Okay,
Today, are you saying that agencies are not just targeting people from one particular party and not from other political parties? That is happening in India, unfortunately. And that is creating a doubt, not in the minds of political parties, it's creating a doubt in the mind of honest businessmen.
Let me ask Mihir about that.
Therefore, I can tell you, today before coming here, I had lunch with a friend of mine who's an NRI from Singapore. He runs one of the largest hedge funds based in Singapore. He came to me and said, and this is something which you can verify, I wasn't aware of this, and he came to me and said that in the last few years, the income tax form, earlier the income tax form used to ask non-resident Indians only to disclose their income which is accrued in India. Now the income tax form is asking how many days is an NRI spending outside India, which is fine, that's to establish whether or not they are NRIs. But now it's asking NRIs in the income tax form that please tell us the ownership of your company overseas. Please tell us what business you're doing overseas. then why is a person choosing to be an NRI? And this gentleman who came to me, I can assure you, runs a very successful, very clean business. He's saying that why should I be an NRI anymore? And I love my country, but I'm choosing to now move my citizenship from India to another country. So essentially, agency overreach, I repeat, is actually driving good businessmen away.
Let me take that
it's
to
not
Mihir
attracting people. It's in fact aiding and abetting the brain drain.
Is that a valid point? Is that what is holding back private investment in India today?
It is part of a larger question, which is that investors in general see too much risk, including political risk in India. I am afraid that, as with many strong leaders across the world, anti-corruption programs that are deeply under the control of the executive can sometimes slide in India as elsewhere into following up on political rivalries. And I think that there is a reasonable fear that some of that is happening here. But more to the point, fear of the agency, fear of the courts, fear of the atmosphere, and within the government, fear of the Vigilance Commission, etc., has caused a situation in which you can't take a decision at time t and expect that at time t plus 5 people will give you the benefit of the doubt at having taken that decision, whether you're a private investor or a bureaucrat, having taken that decision with the best interests of your company and the government, or the government in mind. So there is a great deal of lack of trust, and therefore there is a very, very high risk perception, and I think that's the fundamental structural problem that nobody's attempted to resolve.
I want to ask Daniel about that, because the RBI's report as well has talked about the need to change labor laws, taxation, legal reforms as well. I think that's really important and often doesn't get talked about as much. Do you think that this whole question of agency overreach, the way the legal system is structured in India, taxation, etc., do you think that that is hurting even foreign investors from looking at India, or is that an unfair assumption to make?
No, I think it is. I think that India's potential, it goes well beyond the level of gross capital formation coming from abroad that it has. If you look at the level of investment relative to GDP coming from abroad, it could easily double by having a more more efficient taxation, legal, and bureaucratic system. There are more hurdles than just the taxation system. But I think that, somebody was mentioning before, very good analysis first. It was saying that these reforms that the government has taken are going to start to pay off in the next couple of quarters. Let's be extremely worried about that assessment for one simple reason, not because the esteemed colleague has made a mistake, but because it is precisely now when we should be seeing the positive outcome from the reforms made a couple of years ago. Remember that the expectations of analysts that have been trimmed down for the Indian economy in the past 3 quarters already reflected an alleged boost in internal demand coming from the reforms implemented by the Modi government. So the Modi government did have a tremendous level of external support and definitely a very optimistic approach to the impact on internal demand of its policies. And unfortunately, the risks that I see to the Indian economy is that by not paying attention to the direct impact short term and thinking that all of this is long term and in a couple of quarters it'll be sorted out, we are missing the bigger picture. The bigger picture is that current policies are too interventionist. Current policies are so interventionist that are eroding internal demand, which is essential for India to continue to improve its economic model and its growth model. Well, and we can talk about oil prices and all of this.
Sure. But no, you make some very important points there, about what's holding India back, and I think that's what the RBI was trying to say as well when it said that it's not just, this is about structural reforms, and that's why the legal system, the taxation, labor laws, all of that becomes important. I have time for last comments from everyone in what we are calling the knockout round, because this is the big fight, but nobody's been fighting here today. So Nasir, I'll start with you. Your sort of words of wisdom to the government today as we say goodbye.
Nidhi, I have a few remedies that I would want to give the government.
You have a minute.
Clearly. Yeah. So I think the first things first is the government needs to address the financial sector reforms. I think that is very, very important. Transmission of liquidity remains first priority number one. I think that is the way forward. Number two, ensure that the credit lines come into MSMEs and SMEs. I think that is very, very key to ensuring that your growth starts to pick up again. Also, somewhere down the line, get in larger participation of multinationals to support infant industry cases such as MSE and MSME and SME to ensure that they actually grow and in the process create a multiplier impact. I think some of these things is where they should actually put their focus on. My last point is do not send confusing signals. Your electrical vehicle was an incorrect statement that you made during the budget, in the sense that, it's my opinion, you should not have announced subsidies, because you're actually ensuring and telling your end consumers, look, dump your diesel engines, your petrol engines, and move to electrical vehicles without infrastructure in place.
Sanchita, your quick sort of advice to the government.
Sure, I'll quickly take up from what he said, because I agree with all of those points. I think we are in a low interest rate regime. The transmission of rates is primarily a must. The consolidation of the PSBs and further lending to the NBFCs need to start very aggressively for consumption to take off. Luckily, we have had a overall averagely well monsoon, so I do not see consumption falling off the cliff like everybody's predicting. Having said that, I don't agree with Daniel. I think Indian businesses and the entrepreneurship have stood the test of time despite governments, right? We see specialty chemicals coming up in India the way it was never there a decade back. We see financialization of savings. AMC, if you look at the sector, if you look at life insurance sector, if you look at commercial real estate in India, they're taking off like never before. So having said that, I think more formalization of the economy, more stable policies, more law enforcement contracts. The government needs to be very clear that in India, the ease of business is not a phrase. Law enforcement is a must.
Okay, Rajat.
Very quickly, I'll just point out a story came out in Live Mint which said that the biscuit sales might be going down, but the mobile sales are actually going up by 30 percentage points. So this just shows that how
the contradictions.
The contradictions within the overall economic story are there. And also speaking, my diagnosis has been always the credit squeeze that has happened because of the shadow banking crisis that was there in the Indian economy. But the McKinsey report, which looked at 23,000 company balance sheets in Asia, they have said that all of these private companies are finding it very hard to service their debt. Their interest coverage ratio is greater than 1.5. All of these things show that they do not have access to credit. And I suppose once the transmission happens of the repo rates, of the policies of the government, you will see fundamental changes happening. There will be ease of credit in the market. You will see these economies, these private firms reaching out to credit, availing it, enjoying the benefits of low interest rate regimes going forward, and the recovery will happen eventually.
I hope that happens. Mihir, last word. Do you think the government has finally realized that this is a serious slowdown, that this is a problem, and therefore is trying to at least address it in the way these announcements, for instance, have been made? It's not easy to roll back budget decisions, for example, but they did them.
Well, let's hope. I don't know. I mean, let's see that. You know, there was a lot of pressure on them to do something, and hopefully, people will keep up the pressure so that they'll keep on making whatever liberalization moves that they need to. But I think that I return to the long-term issue, and I think that is what we really should be thinking about. And the truth is that we have to abandon this arrogance as a nation and an economy that growth will inevitably come to us. We have to abandon overconfidence, and we have and those notions have given us, for example, this idea that we are a large economy domestically, so therefore we can become a upper middle class and a upper middle income economy purely on the basis of domestic demand. We can't do that. We have to start exporting. We have to start being competitive, and that requires actual fundamental structural reform, which the government hasn't yet started to do.
All right. Well, let's see how the next few weeks and months pan out. Clearly, I think we all agree that today's numbers were disappointing. This was not what most people expected. But can India pull itself out of this? Some people seem to think it can over the next couple of quarters. Others are not so optimistic. Let's see how it all pans out. Thank you very much to all of you for joining us. Goodbye.